All right, let's just dive right into this explainer and evaluate the heavyweight storage matchup between SanDisk and Western Digital post-spinoff. Now, if you've been tracking the tech markets recently, you know that memory and storage are absolutely on fire right now. But actually deciding where to place your capital, well, that requires looking way beyond the hype.
So this is the ultimate question for investors looking to capitalize on this massive data boom. We're looking at a completely fascinating scenario here. How one giant parent company deliberately split itself into two very, very different investment vehicles. You really have to ask yourself, especially in this age of artificial intelligence and just endless data generation, which side of the storage coin actually offers the better risk-to-reward ratio for your specific portfolio?
Here is our roadmap for today. We'll quickly review the whole storage spin-off story, break down their distinct business models and core tech, and analyze those AI market tailwinds. Then we'll compare their financials and valuations, deeply evaluate the specific market risks, and finally, help you figure out which stock actually fits you. Okay, Section 1, the storage spin-off story and how they unlocked value. To really understand this, we have to go back to 2016. Western Digital bought SanDisk for roughly $67 a share to massively strengthen its flash portfolio. It made sense at the time. But as the markets evolved, the completely different needs of traditional hard drives versus fast flash memory became super obvious. So in a massive strategic pivot, they spun SanDisk off into its own independent, NASDAQ-listed company in February of 2025. The goal here was simple: let both entities operate totally unconstrained by a broader, sometimes conflicting corporate strategy, and unlock that distinct shareholder value. Moving to Section 2, business models and core tech. The hardware divide. The divide between these two is actually pretty stark. SanDisk is laser-focused on high-speed NAND flash and solid-state drives, or SSDs. We're talking about the gear going into consumer electronics, high-end gaming rigs, mobile devices, and those ultra-fast performance applications. Western Digital, on the other hand, has just completely doubled down on being the high-capacity enterprise hard disk drive giant. Sure, Western Digital still has some SSD footprint, but their absolute bread and butter, that's the traditional HDD market. And Western Digital's primary model today relies heavily on partnering directly with hyperscalers and cloud service providers. As their CEO, Irving Tan, pointed out recently, virtually every single AI workload creates data that needs to be stored persistently and cost-efficiently. That is exactly what Western Digital's immense scale and reliable enterprise HDDs provide. They are literally the bedrock of the modern data center. Section 3. AI growth and market tailwinds. Feeding the algorithm. Now, this is where the story gets really compelling for investors. AI essentially needs both companies, but for totally different reasons. AI needs SanDisk's rapid flash memory to accelerate complex inference workloads. Think of it like the fast twitch muscle needed for AI to think and react in real time. But AI also generates an unbelievable, almost unfathomable amount of data that must be kept forever. For that, it relies heavily on Western Digital's hard drives to persistently and cost-effectively store all of it. One provides the speed to compute, the other provides the massive vault to remember. Let's look at Section 4, comparing financials and valuations, growth versus value. Looking at the mid-2026 valuations, the contrast is practically night and day. Since the spinoff, SanDisk's market cap has absolutely rocketed to $295 billion. They're commanding a sky-high price-to-earnings ratio of over 69. That number reflects some seriously intense market expectations for future growth. Western Digital sits at a slightly lower market cap of around $234 billion, offers a much more grounded PE near 40, and critically, they reward their investors with a recently increased 15-cent quarterly dividend. I mean, you have to look at SanDisk's staggering 600% stock surge in 2026. Think about this for a second. After bottoming out at just under $28 a share in April of 2025, SanDisk delivered in just 14 months what it took Bitcoin 9 full years to achieve. Driven by a massive global memory shortage and those insane AI inference demands we talked about, the stock soared right past the $2,000 mark. It is the textbook definition of explosive growth potential. But, as you'd guess, with that comes some pretty immense volatility. On the flip side, though, Western Digital flexed its own financial muscle. In their fiscal third quarter of 2026, they posted a massive 45% year-over-year revenue jump, hitting $3.34 billion. Even better than that, their gross margins pushed over 50%. They're generating over $1 billion in cash flow from operations. So no, it's not the 600% rocket ship of SanDisk, but it is incredibly robust,
highly profitable, and it easily funds that steady dividend. Section 5. Evaluating the market risks, or the bear's case. Because we have to talk about the risks. While SanDisk stock is thriving, their actual underlying business is fighting a brutal uphill battle. In Q1 2026, looking at global NAND market share, Samsung utterly dominates with 29%. SK Hynix is at 18%. SanDisk is basically tied with Micron, down at just 13%. So the reality is, if you're buying SanDisk at a 69 PE ratio, you are paying a massive premium for a company that is currently only the fourth largest player in a highly commoditized and intensely competitive global flash market. Meanwhile, Western Digital's primary risk lies in the very technology it champions, the traditional hard disk drive. This is a very mature market, and frankly, it is in a state of long-term decline when it comes to consumer uses. The constant threat here is that as flash memory gets cheaper and cheaper to produce over time, cloud providers and data centers are going to increasingly shift towards SanDisk-style SSD alternatives. That could seriously erode Western Digital's core customer base. So, Section 6, which stock actually fits you? Making the decision. Here is the final verdict, guys. These are two very distinct flavors of the exact same data. Boom. SanDisk is for the growth-hungry investor. It's for those of you who can stomach high volatility, who want that direct exposure to the explosive AI flash industry upside, and who truly believe SanDisk can capture more market share. Western Digital, conversely, is for the value investor, the one seeking stable cash flow, enterprise-level resilience, significantly lower volatility, and the comfort of that regular dividend income. At the end of the day, both of these companies are absolutely essential to the future infrastructure of AI and global data. The spinoff was entirely successful in letting them finally play to their specific strengths. But here's the ultimate question you have to answer for yourself. When you look at your own portfolio, are you strapping in for a volatile, high-speed rocket ride with flash? Or are you looking to quietly bank the dividends of a rock-solid hard drive foundation? Weigh those market risks, look at the growth potential, and make your play.